Hey everybody, Sam Oakes here from the Financial Planner Life podcast, and today I've got an awesome guest. It's Oliver McDonald from Engage Wealth Management, and we dig deep into corporate financial advice and why financial advisors aren't really in that space, but what are the opportunities and why you should get in there. He even shares his process of how to do it and some hints and tips around who to partner with to get the best results. Spoiler alert, he now gets about 90% of his business on an inbound basis. So Oliver knows exactly what he's talking about. Check out the podcast and get out there in the corporate advice world. Oliver, thank you so much for joining me today on the Financial Planner Life podcast. How are you?
Very good, Sam. Very pleased to be here. Thanks for inviting me on. All good.
That's amazing. Look, but listen, thank you so much for coming on at such short notice. I've been a bit naughty. I didn't have any podcasts lined up and I've had a bit of a break. I've been off for half term looking after my daughter, celebrating her 7th birthday. So I've not had any podcasts lined up. So last minute, you came to the rescue. So thank you so much for that.
Here I am. No problems.
Fantastic. And obviously we've had a bit of a chat anyway, pre-podcast, and I was really keen to get you on because of your journey into IFA. So you've come from an employed background, banking background. And when I very first started in recruitment, I did a lot around bank assurance when there was an abundance of financial advisors and all the banks were hiring. And then you moved from that environment then into the IFA background on an employed basis and finally ending up running your own directly authorized business. So it's a lovely journey, I think, that people will love to learn about. So let's just kick things off, Oliver. Just tell us a little bit about how you actually got into the profession.
Yeah, so my journey is, I guess, a little bit different to the class that lots of people sort of fall into this profession. Whereas I was actually one of those strange people that wanted to do it. And but I got to the age, didn't go to university, got to sort of 2021, decided I need to do something with my life. I was out in the French Alps and having a great time and decided, I think accounting's my thing, pretty good at numbers. Talked to the accountant there and he said, why don't you look at financial planning? It's more, you're actually talking to people, not sat so much behind a screen. So got back. I actually, at that time, was the level 3 diploma that I did. Got a job at Barclays Bank. And this is, not high level banking. This is a cashier on a minimum wage back then. And worked hard, worked my way up there, up to dealing with premier level clients, and then did my exams there as well. Carried on the sort of level 4 exams. Got a job at Lloyds Bank, which is more. I think with Lloyds, if you really want to learn how to sell, try and sell life insurance and income protection in a bank, because nobody goes to banks and nobody goes there definitely for life insurance. So if you want to learn to sell that's a great way to sort of to get into it. And at that point, I still wanted to be a financial planner. Very difficult to get into the industry. Being young, I was 25, 26 at that time, which I imagine a lot of your listeners maybe are at that stage and are thinking about how. And there are barriers still. That it's an age thing. It's still there, very much. So I ended up applying to companies. I didn't go through a recruiter, Sam. I decided to email, and I remember sending 52 emails to 52 different companies all around the southeast of England, and I got 3 replies. 2 of them said we're a small family company, and one said you come in for a coffee, and that was the rest is history. But that was a local firm in Hove. Went in for a coffee, eventually went in as a trainee financial advisor. I think if you're trying to get into the industry, having that protection background is a great way to start. And then I went in as a trainee financial advisor. So I didn't do the admin, didn't do the paraplanning thing. Was going to do it again, I probably would go through those routes, because it wasn't until I started my own company I realised just how much paraplanners do and just how important admins are. So spent a long time there, worked my way up to director level at that company, and then got to 2 and a bit years ago where I decided I think I can do this myself. I think as a product of lockdown, like a lot of people, you're generating all my own business, kind of thinking, why am I doing this for somebody else? Why not do it for myself? And that was then the decision to what do I do? Do I go self-employed somewhere else? Do we go under a network? Do we go directly authorized? I ended up setting up, limited company and going directly authorized with the FCA. Incredibly tough journey to go through. It's even tougher now. It takes, I think, about a year to get authorized now. Took us 5 months, but there's lots of applications and things before that. And then we got authorized in May 2021. So May 2021. So we've just hit 2 years. We're still here, which is good. I think it's 80% of businesses fail in the first 2 years. So we're still here. We're part of the 20%. Things are going pretty well. So that's my journey so far.
That's fantastic. What a great, clear overview. And there's just quite a lot in there to pick apart. And you said a few things that resonate with me and what I tell other people. It is difficult to get into the financial planning profession. And over the last few years, it's been really tough. Yeah. And although there's a shortage of financial planners out there and we're crying out for new people to join the profession, it still can be very tough to get in. There is a reluctance sometimes for firms to pay recruitment fees for individuals that perhaps haven't got experience within the financial planning profession. It's interesting that you went straight in at trainee level, and I wonder how much, well, I don't wonder, I know this is beneficial, just how much having that experience going through the banking face-to-face experience, so from cashier into selling life protection, all the difference. It was a sales job in banking, isn't it? You know, when you're on that sales floor, I used to do a lot of work with all the major banks, putting personal bankers in. Now I used to headhunt people from like Phones for You, and then say, do you want to come and be a personal banker? I was probably personally responsible for the financial crash then, by the sense. But we used to bring people in from mobile phone backgrounds, even people that were working in estate agents, or if they were working in travel agents, because they had that cross-selling customer-facing USP type sales background, and it worked really, really well. I always tell people, look, you need to go out there and you need to market yourself. If you don't have the experience, but you want to become a financial planner or you want to get into the profession, go and knock on a few doors. I love what you did. I love that you went out, you made a list. It's nice and simple. You make a list, go onto Google, search for local businesses, make a list, put them on a spreadsheet, go on their websites, find the names of people, go onto LinkedIn. You can do that now. You probably didn't do it back then, but you go on LinkedIn, follow those companies, connect with somebody who's a director or decision maker within that business, start liking their content, perhaps start commenting on their content, and reach out with a mail. Because if you're going to send 52 messages, 52 emails, or make 52 phone calls, I guarantee you're going to get a job at the end of it. What's really interesting, what you said was 3 opportunities came up of 52 emails, right?
Yep.
those three opportunities came up, but they came up. And they're there, and they are there, the opportunities. If you rely too much on a recruiter, unfortunately, when you don't have experience, you're going to fall flat on your face. You have to be proactive in your approach to getting a new job opportunity.
Yeah, it's, those opportunities didn't come out of nowhere, as you can see there. And that's the approach I've taken throughout my career, is that if you're short of clients, you're going to have to do some things maybe not proud of, but you're going to have to scrape around and try and find them, and you're going to have to do stuff that's that is hard work, believe it or not.
Yeah.
It's funny you shared the phone background. When I came back from the French Alps, I went and worked for O2 for a year. So I went from O2, and I think that's the big message with our industry, or our profession, I should say, is changing. It's going the right direction, and we're doing more. There is more professional financial planning around. But don't kid yourself. This is sales. You need to know, even if you're selling a fixed fee structure that's independent financial planning, and you're running index funds, that's fantastic. But you still have to sell that as an idea, as a concept. So that's where, and that was probably the wake up call for me when I went to the bank. I thought, I'm just going to be sitting there selling, doing cashiering stuff, and they were like, no, you've got to sell ISAs, and you've got to sell. And then the personal banking was a very hard sales profession, and that got kind of the crisis. I was there just kind of after that as well, which was all good fun. But yeah, I don't. If you're looking for experience or looking for the to get into the profession, like you say, you've got to market yourself, and if you haven't got that sales background, that's what a lot of financial planning firms will be looking for. Because that's what it is at the end of the day. But there are very nice parts of our job that eventually you don't need to sell. People come to me now, which is great, but you don't. It is a sales profession at the end of the day.
What's really interesting as well is something that you said, that you now run your own business. You started out as a trainee advisor on an employed basis when you did your door knocking to find your job opportunity. So they took you on straight as a trainee advisor. You didn't do the administration and Paraplanner route. However, you now run your own directly authorized firm, and you look back and you think, well, actually, administration paraplanning experience might well have been incredibly beneficial to you, because you didn't realize just how much work goes into the administration paraplanning, perhaps the operational side of a business as well. When you're stuck in the role of just being that financial planner, we think, well, it can't be that difficult. I can spin those plates. I can do those things within the first couple of years and support myself. But actually, it probably was quite tiring and exhausting when you ended up running your own business. But my question on that point would be, looking back, Oliver, would you have gone down the administrator paraplanner route over the trainee advisor route with sales experience?
Good question. I think probably I would have. I did. There was one firm that came to me, and their advice was to stop my diploma studies and join them as an admin. And I thought, well, no, I'll just carry on the diploma, and then went in as trainee financial advisor. I don't think you need to. It's just having that knowledge of what they do. And I've always been a very respectable person, so I kind of got the paraplanner is the person that's going to be. We worked in pods like a lot of companies do. The paraplanner kind of bosses that, because although you're the one bringing in the clients, they're bossing that sort of client journey. And then the admin, there's a lot of phoning and chasing, and that's not a job that I would want to do. So I think just understanding those jobs is very, very important. But when I started my own company, it's those things that, yes, you can do the jobs, you can do the admin, you can do the paraplanning, but it just takes you away from what you're great at, what I like doing. When I started my own company, I was writing my own reports, but it would be like, right, taking on a client, I need to now take 2 days off to do all the admin and write a report, and it was just taking me forever. I've now got somebody that comes in. She's the sort of operations manager, so takes care of the operations side, the power planning, and we share some of the admin. But we're looking at probably taking somebody on for that now as well. So I don't think. Sorry, going back to your question, would I've gone down the admin power planning? Probably not. No, but you need to just get a very good grasp of what that role does involve.
Yeah, absolutely. Okay, I'm going to dig a little bit deeper onto this now. You run your own business now, okay? And there will be people listening to this that are thinking about getting into the financial planning profession, and they are considering the administration paraplanner advisor route, or they're thinking about becoming a trainee planner, or they might even be thinking about joining one of the many academies that are out there to go and fast track themselves to being a financial planner. Running a business, and I know you've just started as a smaller business, but if you had in front of you somebody that was a level 4 qualified power planner, been doing it for 2 years and was looking for a trainee advisor position, or you had somebody, say, that spent 5 years in a sales role, relationship role, and had really solid sales experience, which one would you choose?
It depends also on the paraplanner's experience, if they've got the sales experience. I think the paraplanning is a profession in itself now, and it certainly can be. And you can go further than just paraplanning. The lady that's joined me, she's our operations manager. She will become a shareholder director, looking after compliance. So there's that route to go. So if you're thinking about what side you want to go, think very carefully about what side you enjoy. If I had those two in front of me for an advisor role, I would probably go with the person with the sales experience, because it's just huge. It's the technical side of our business. You do need to know it, but the amount of times I've gone into client meetings and it was strange at first. It wasn't intentional ever. But I mentioned, we're engaged, we're having our first child, and then you spend half an hour talking about that, or you talk about cycling, or you talk about, I worked in the French Alps, and that just conversation then goes on for half an hour. That's what clients want to talk about. They don't really care too much. You still need to talk about it, but asset allocations and efficient frontiers, that's not what excites clients. So, and that's not what finds common ground and builds rapport with clients. So, yeah, it depends on the person. I think paraplanners can certainly go into the advisor role, but just having the technical knowledge is that's half of the job, really.
Would you advise, say, a paraplanner to seek some soft skills training around relationship building, perhaps understanding sales techniques, for example? Do you think that's good additional training for a paraplanner that has the drive and ambition to want to be an advisor? Or do you think they should sit in client meetings more in the firm that they're in? Would you look at that if you were to have a paraplanner in front of you that was thinking about being a trainee advisor?
Sitting in the client meetings, that's huge. Yeah. So definitely just to understand what that journey looks like. That you're not talking about the technical side of it for the vast majority of those meetings. You're normally talking about the client, what they enjoy, what they want out of life. But yeah, the soft skills training. If you've got paraplanners listening to this that are looking to go into that trainee role or financial advice role, then just getting some wider experience outside of the technical side. So, but I think sitting in client meetings, just understanding the culture of your company, how advisors work, that's absolutely huge.
But Oliver, I'm going to stick on this area at the moment, and this is just your opinion, by the way. You're not sort of speaking on behalf of the profession. This is your own personal experience and your own personal opinion. But there are lots of paraplanners. There's lots of people that want to get into the profession, and they have two choices. One is like administration paraplanner, become an advisor. The other is go down an academy, go self-employed and become an advisor. Or hopefully knock on a few doors and somebody takes you on because they like you, they like your background, they like your experience, and you become that advisor. It's a tricky one, isn't it? and I'm people often ask me, should I be admin? Should I be paraplanner? Or can I go in straight as an advisor? And the thing for me is, like what you've just said, and I'm going to echo it. I think if you've got a background and experience of relationship building, and perhaps even if you have strength in your network. So let's say somebody's like a second careerist. So if someone's a second careerist, they might be like, let's say 25-year-old plus, right? They're 25 years plus. Maybe they spent 5 years doing something. Maybe they didn't go to university. Maybe they spent 4 years being a marketing account manager. So they're used to managing large marketing accounts, dealing with, individuals within a corporate background, building relationships, giving feedback, selling the services, all of those typical types of things. I think somebody, when they've got that transferable skill set of a proven background, that's quite attractive then to go into the financial advice side. And even going down those academy routes, if you've got financial backing behind you to go down, say, a self-employed route and set your own business up. Now, you are somebody that how long did you spend employed within a financial planning practice?
7.5 years.
7.5 years. Now, going back that 7.5 years, if there was an SJP Academy in the form it's like in now, or equivalent, not just SJP, do you think you'd have taken the plunge into an academy on a self-employed basis, knowing what you know after spending 7 years employed?
Oh, good question. That just depends on personal circumstances massively, I think. Funny you should say that. Is that when I left Lloyd's, there were two guys that were also doing the exact same role as me. We all got made redundant at the same time. Luckily, I'd already found my new home. My personal circumstances meant I needed to be employed. I didn't have the financial backing to go self-employed at that point. The two guys that went elsewhere, they both took the plunge into SJP, and they said, "I've got 6 months worth of outgoings. I'm going to try it for 6 months and see what happens." And I think that, I'm not sure if they went through the academy because they'd already got, I think they'd gone level 4. They might have gone through the academy at that point. So this is 2013, 2014. They went through that process and they've become very successful in that route. What works for individuals is going to be, it comes down to personal circumstances, and it's the same when I started my company, which we talk about, but it's again, your personal situation is going to influence what you do in terms of how you set that up, whether you're self-employed, whether you set up your own company or you go employed. I went the safer route of employed because I was so I'd start a relationship. We're looking at getting a property, and I had a stepdaughter at that point. So for me, employed was an absolute no-brainer. two guys that went self-employed, no dependents, no very low outgoings, so they could afford to take that risk. And we've all done pretty well long term. So I don't know whether it's self-employed versus employed. It's probably more have you got the drive and you've got the determination and you're ready to put in the hard work, because none of us have got successful through luck. It's all been each of them. I know they're hard workers and they've done very well down that route. And I've worked my ass off to get to where I am. So
yeah. But essentially, it is a gamble, isn't it, when you go down that route of like some of these academies, because you don't know what to expect. You've never worked in the profession before. You don't know what you need to do as a financial advisor. You might be told a few things in the safety of a training and development program, but you don't know the realities of the job, how long it takes to get paid on it, how many no's to get to a yes, how quickly you can convert a client. And I think going into something where perhaps financially you're a bit nervous, maybe you don't have, and I'm saying to people, like, make sure you've got 6 to 12 months of income, like in your bank to cover you.
Yeah, I mean, when I would go higher. Depends again how you set up. So when I set up my own firm, we set up limited company, directly authorized, and there's certain financial things you have to have aside. So this is where it comes into where I'm now. My business partners. I've been approached by companies before saying, we want a financial advice arm to our business. From an accounting firm, from a mortgage broker firm. I said, that's great. There's two things you need to provide them, because I've got plenty of commitments. One of them is going to be a lump sum of cash, and one of them some clients. And either of them could really sort of explain where they're going to get clients from, how they're going to introduce solid clients to the business if I set up my own firm. And even wanting to put in cash. We said, that's not what we do. So my now business partners who are an employee benefits firm, that's kind of how we started. We put some money aside for, I did 12 months. If I started again, I would say 18 months as at least. Just again, depends on your circumstances. My outgoings are pretty high. We've got, mortgage, kids, dog. My wife works part-time. So it again depends on your personal circumstances on what you do there, but 12 to 18 months is certainly, I'd say 18 months minimum you want, so that you've got time to build the business in the way you want to build it. If you're going down, the full-on setting up your own business kind of thing. If you're going self-employed and there's some sort of lead generation through a company, perhaps you don't need that much. And I would just say on the sort of, you mentioned there how long it takes to get paid and things like that. I've heard some. This is partly why we went directly authorized. Sorry if I'm jumping ahead, but if this is
you're right,
partly why I went directly authorized rather than through a network or self-employed. But is because I heard some horror stories of networks taking forever for payments to be made. And you're doing that first case and they want you to submit all the paperwork, and a month later they come back to you and you're okay to go ahead with the case. We set up in May 2021. I got my first payment in July, so less than 6 weeks later. And that was from setting up a pension scheme. It was the strangest feeling, because I sat there and said, it's how much it costs. And they said, shall I send it to your bank account now? And I was like, oh, yeah, okay. So here's the invoice, and checked my bank account as soon as I left the meeting, and there was money in there into the business account. And I did some insurance and things at the beginning, and we got paid pretty quickly. So I think there's been some horror stories I've heard on podcasts before, people waiting 9 months, 10 months before they even got any money into the business. I think that's if you're going through a network, or I don't know how you end up in that position. But if you're starting your own company, you're going to need to start thinking about where your clients are way before you start. What clients are you going to bring on straight away? Have you got contacts already? Have you got family that you're going to do even just a bit of life insurance for? I think that was one of my first clients, was one of my brothers, and we ended up doing his topping up his life insurance. So you've got to think about those things, but way before you start. But that's one of the reasons we went directly authorized, was some of that, along with other stories we heard from networks. We decided to go down the more painful route of directly authorized initially, but now allows us to run our business in the best way for our clients.
Lovely. And we'll get onto that in a minute, actually. I just want to go back to when you were working on an employed basis, because you started as a trainee. You had a lot of success in that business, right? You went from a trainee, became a financial planner, and did you say you ended up one of the directors? Is that right? Or partners?
Associate director, I think they called me. More of a name thing, but yeah, ended up. I don't mind talking. Yeah, as a trainee, and you're starting on pretty low earnings, and you've got to prove yourself. And I've never been a natural salesperson. So I've just said earlier, this is a sales profession, but I'm not a natural salesperson. I just what I learned early on is stick to your word. If you say you're going to do something, do it. And work incredibly hard, and it's as simple as that, really. And I learned from other advisors, and then I would probably work in a way that other advisors weren't happy to. I think if you've got that hard work, I've said it a few times now, but that's massive just to get ahead in any profession. Worked up to, so then became a sort of full financial advisor. After a while, I was a few advisors left, took over some of their clients. So I ended up with a ridiculous amount of clients. I think I had 250 clients when I left, individuals, plus 30 companies that I was looking after. It was, it was carnage. But that's where I got to in that position. And that's just through hard work, doing the work day in, day out. And then, got up to the position of associate director, which was, wasn't luck. It wasn't that I did something massively different to what anybody else would do. And I could have stayed there for 10 years and been very, very comfortable. But I thought at the age of what I was then, 34, thought I can do something better for clients, and I think I can do this better myself. So which was incredibly arrogant, but hey ho, that's where maybe that's a good trait you need.
I don't think it's arrogant. I think naturally everybody gets to that point where you either consider employment or you think you can do this yourself. And when you start looking at the facts and the figures, and you think, wow, I could make some serious money out of this, but also I could live the lifestyle that I want to live, and I can do things how I want to do it. I can have the brand how I want it. I can position things the way I want it. When you're employed, you are at the beck and call of the owners of the business. And if they don't have the same drive or enthusiasm as you do, or they don't have the same value or culture, and it can be very, very difficult, because if your intrinsic values aren't aligned to that employed role, then you often feel as if you're living a false life when it comes to work. And I think that's the part where, when you are looking at job opportunities and you are looking at companies to work for, be sure to dig deep around what their culture and values are actually like. Because if you're going to spend a lot of time there, you want to make sure that you are aligned to that business. When you made that decision then, and you said to yourself, right, I'm going to move on, and you'd done a really good job. You were probably earning really good money. You'd fallen on a fair few clients there, client banks. That's like the dream job for some people who are thinking about becoming advisors. And I expect the dream job for some advisors that are in companies where they're struggling a little bit to find clients, right? So you had it probably quite comfortable, would I say? Were you comfortable?
Yes, very comfortable.
Very, very comfortable. So what about that feeling of, right, if I'm going to go and set up on my own, and not only did you go and set up on your own, but you set up directly authorised, so you do need a lump sum for capital adequacy and everything like that, right? Yeah. And that was that 50K,
no,
50K
20,
in the bank?
20, to start with, Just needs to be accessible, right. So instantly accessible at any time,
Yeah, so you needed that money to draw on yourself. But what about that feeling of, where am I going to get my clients from? Because obviously people have restricted covenants in place. When you're employed, there's do's and don'ts, non-solicitation clauses, et cetera. I mean, they aren't withheld. It takes about 6 months before one passes, I think, legally, dependent upon what's written in your contract. Don't take my word for it. You don't want tanks on the lawn when you do something like that. But did you consider that at all, because you'd built relationships with clients under a firm, under a different company name? Did you consider those relationships? Did you think about them following you? Did you try to target them afterwards? What was your strategy around client development, setting up your very first business?
No, so you have the restricted covenants, and you need to abide by those. So, well, it's up to you whether you do, but I did. So it was a case of, we're starting afresh. We need to generate leads, and we need to generate them pretty quickly. But that's why you have that 12 to 18 month buffer of income, so that you can spend that time building relationships, starting again, but having that background, the financial advice background, the sales background, that's something I've done plenty of before. But that's why I also partnered with an employee benefits company, which we can come on to. Was the idea behind that, was that we generate leads from there. And initially that was a struggle. It's didn't, work. We didn't hit the ground running, but that's started. That's gone bananas now, which is great. But that's something we've developed over time. I very much started out with, right, where can I go? So you can go. There's the local networking. I was quite active on LinkedIn, started just posting lots on LinkedIn, educational posts, got some clients contact me through there who are now my clients. And it was just, lots of different marketing routes to go down. Vouched for, which I've never used before. That's probably one of our best lead generators now, because that's where our clients leave reviews, and that's where people, when they're Googling, they find you on there. SEO, didn't know anything about it, still don't really. I just someone said put out loads of content, and somehow we now come up, and in Brighton and Hove, we come up pretty high on as the financial advice as companies, up against a lot of the bigger companies. So there's a lot to learn when you leave there. What was your original question about?
Just around client acquisition. No, that's fine. You answered the question, really, is that you didn't, look at your existing relationships. There were probably some that you would class as advocate relationships that that would follow you at some point. You obviously stuck to the restricted covenants that were in place and didn't sort of break those clauses, which is great. And that's obviously advisable because people do get sued. So that was a good solid bit of advice there. But the advice you then gave around client development and putting yourself out there. So you were reaching out to people on LinkedIn, which I think is really interesting because not many financial advisors actually do that. But it also sounds like Vouch For was a really good opportunity for you to win new client opportunities. So if someone's kind of listening to this and thinking, I want to, I need to start off fresh, I need to kind of get myself out there, getting yourself out on LinkedIn, putting content out there, reaching out and networking with people on LinkedIn, Vouch For was a good option. And you started putting content out on your website, and, the black magic and black art of SEO worked for you, and you managed to get yourself, up the rankings. Did you spend much money on lead generation at all?
Nothing on proper, I guess, the guys that inbox you every day about lead generation. We did Unbiased. I would just say for anyone, if you're starting your own thing, Unbiased it's a lot of advisors look down their nose at it, and because you don't get real quality in your niche clients. Perhaps if you want to work with tech execs that earn 300 to 500k a year, that are in their last 5 years of employment, you're not going to find them through Unbiased. No one goes to Unbiased that are at that level. But we used it for the first year, and I don't mind talking through the figures. I think we spent 3,300 in our first year, and I generated from that 39 grand of business. So a 10x return on your money is okay, I'd say, in most professions. But you're going to get those kind of clients. Depends what you're doing, what you're setting up your business for. If you're setting up down a very specific niche, Unbiased is not for you, and you've got a way into that niche, then fine. But if you're starting afresh and it's kind of like that, we'll take on most clients initially. We're now at the point where we're pretty much binned off Unbiased, but I've had some huge clients come through there. Really, really strange. Just couples that are in their mid-50s that have both built up their own pension pots over time, and they just don't know a financial advisor. So through their friends or family, so they've come through Unbiased. We've met with them, and they're some really great clients now. So I wouldn't knock it too much. The prices on Unbiased have gone up massively, so the return on investment isn't as great now. But we still keep it going because I probably accept about one lead every couple of months on there now. So it's okay. But Vouch For will take time. Unbiased is one of those things that you can get a return on your money pretty quickly because the leads start coming through straight away, and you'll learn which ones to click on and ones to accept. And there'll be a lot of ones where you accept it, you never get into contact with them, or they speak to you once, you never see them again. So there's a lot of that, unfortunately. But that's like any marketing, any lead gen. If you're putting content out on LinkedIn, you might get 1 or 2 views, but if you start putting it out consistently, you'll get people, there'll be people watching, and you get inboxes from people that you've never really thought about before. And they said, I've been watching your content for the last 6 months. I'm like, you've never liked or commented on anything before. And then they say, well, I've got this money, I need to do this. And it's like, oh, fantastic. So I would definitely try new things. If you're starting out, the lead gen for the new clients, you've just got to try a lot of new stuff, and you've got to try stuff that you're not comfortable with. I started doing videos on LinkedIn on my commute. Used to cycle over the South Downs to Brighton and do little videos, and plenty of people sort of inboxed me on that. Oh yeah, I saw your videos. I was like, yeah, you never like or any comment on any of them, but people are watching and they are listening to you.
Oh,
so
100%. I am a massive advocate of putting video out. That's why I do the podcast. I put videos out. I've got a videography company now, trying to do it for financial planning companies. We're working with the likes in legal in general, for instance. We were out there yesterday filming some claims videos for them. And I think what you just said there about people not commenting or liking, it's really important, because when you're in a niche and you're talking about something that is super niche, people tend to watch. They don't like it or comment. It's not a kitten falling out of a tree or something like that. It's an informative bit of information. They tend to watch it, listen, and move on. But LinkedIn's algorithm will recognize that they've watched it past a certain point and start recommending that to other people that are similar. So it's not to be disheartened if someone doesn't like or comment on your post on LinkedIn. Yes, it does help with the reach, but it's also how much people watch. So if you look at the video and you look at the analytics and you bring the creator mode up, it will tell you how long your video's been watched for. So I've put out videos like, I think there's one I put out for St. James's Place where I stuck on a VR headset talking about their training. And I had like 25,000 views of this video, right? Which is huge. On LinkedIn, that's like the equivalent of like 100,000 views on Instagram, right? And I did that and I looked at the time, and this is like a minute clip, right? About a minute clip. And I think I had something like, I don't know, 50 hours of views, of time it was viewed for. So when you start adding that up and looking at it, it's incredible. So it's the eyes on it. And I've had people reach out to me exactly the same as you. I'm thinking, well, when have you ever liked or commented on anything that I've done? But they haven't. They've just been watching you. So as long as you're putting regular content out, you're being seen, and it goes past that point where the algorithm goes, hang on, people are quite interested in this, it's engaging, then you're doing a good job. So yeah, don't get disheartened by the lack of likes and comments. A lot of people are watchers. A lot of people don't like to like and comment. You can imagine in my world of recruitment, sales, and people don't want to be liking my content too much because they don't want their boss to know that they're liking a recruiter's content. So, there's lots of reasons why, but they will follow you. And LinkedIn is about followers as well. So, you put content out and they will follow you. If they're following you, within that first couple of weeks that they follow you and connect with you, they will see your content a lot.
Yeah.
So making sure you're connecting, make sure you're following.
Yeah, and nobody's comfortable, doing content and video, especially video, or even just putting out a LinkedIn post. Nobody's natural at that, I don't think. I always put it out and just put my own spin on it. And but yeah, like you say with the followers, I've had other advisors from other firms follow me, but of course they don't like or comment on anything because their boss is watching. So.
But it's a good thing, you getting seen by other financial advisors within your area is fantastic for the growth of your business as well. You need your personality to come across. You need your culture to come across. So you need to be honest and authentically you. And those around you within your environment will start to think, he sounds like a really great person to work for. I'll follow him. I'll keep him in mind when I'm looking for a new job opportunity. So when it comes to the growth of your business, you as the leader of your business, getting out there and being seen and heard is going to help your business grow, not only from new client deals and client acquisitions, but from advisors, power planners, administrators. People will be listening to this podcast. This podcast will probably get 500 listens and views within the first 7 days. And that's very niche. Actually, that's top 10% globally. Believe it or not.
Wow.
If you put a podcast out and you get over 420 within the first 7 days, that's top 10% globally across all podcast platforms. Yeah, which is pretty. I'm pretty proud of that, seeing it's such a niche subject matter.
Yeah.
And that's why podcasting, I believe, is such a fantastic way to market because and we're going to get onto this now. You're in the corporate world, aren't you? Right. So you're not a traditional kind of private client advisor. You give corporate advice. You've even partnered with an employee benefits company, right?
Yeah, I do the traditional. Just touch on that. Yeah, I do the traditional yeah, full
Yep.
fat financial planning. But yeah, we're very heavily involved. I think Nick Lincoln came up with that. I better credit him on that
Yeah.
if he ever listens to this. Yeah, full fat financial planning, which is you're kind of using cash flow modeling, actually building plans for clients, and that's why we invest. We don't just invest clients for the sake of making money. So yeah, I have my private client book, which is growing over time. But yes, we're heavily involved in the corporate space.
Fantastic. So let's talk about that then, because it's an area that not all financial advisors either feel comfortable going into, which is the corporate world, or just don't think about it because they're chasing those private clients more so. So just tell us a little bit about how did you get into the corporate world? Also, when you set your business up, you, I think, quite smartly chose to partner with an employee benefits company. Did that help you? Let's talk about that. Let's talk about the corporate world. Why did you choose to get? Tell us a little bit about that.
Yeah, so my previous, obviously, anyone listening to hopefully knows that auto enrollment was introduced at companies. So every company has to set up a pension scheme. Started in 2012, and it started with big firms and went down. My previous company, we got involved in that a lot, and not many other financial advisors did. They said it's not profitable. What are you doing? That's madness. But we would go into companies, and there'd be 100 staff there. We'd do a presentation to them saying, right, yeah, there's these new rules coming in. It's coming in 3 months. You have to have a pension scheme. This is how it works. This is who it's with. This is how the contributions work. And you'll get, well, back then it would be if you did 100 staff, especially if we went into, that's all, always face to face back then. You would get 10, 15 of those say, oh yeah, I've got 50 grand, 100 grand at another pension. Can I consolidate those? And do you do some more the retirement planning side of things? And you just pick up clients like that, and you get a few of those firms on board. And that was very much my old company. They had those connections locally, normally around Sussex, but we did a bit of marketing, and we had random companies come to us. We're now in that second phase, and I think that's where a lot of financial advisors have neglected this area, because auto enrollment's done, it's set up, it's running. Where I've got involved in this, and we've developed a service with my employee benefits firm, which is my business partner's company. They've grown very quickly. They wanted the financial advice arm. They had individual stuff come to them, but they also said we have these workplace pension stuff where it's either brand new companies that have set up and they need to set up a pension scheme, or what we do a lot of is that second phase where you've had a company, they've set up with a basic pension option, something like Nest. That's normally always the route. And they're now at 50 staff, 100 staff, 200 staff, and they're recruiting, and people are saying, well, hold on, why have you got a Nest pension? So staff are becoming more aware of what the options are. They know that the leaders in this industry are the likes of Aviva and Royal London. So we thought, well, why not get involved in this a bit more? And we've developed, it's taken a long time, don't get me wrong, we didn't start day one think, we've got this great presentation that we go out to and we're going to market this. But what I've done now is developed a process where we take companies through that journey of going from something like Nest or People's Pension, if they want to look at upgrading their scheme, getting better charging structures, implementing salary sacrifice. We'll take the company through that journey, and we charge the company to do that. It's a process that we're still developing. We've got it to a pretty good level now, and we've got consistent clients coming in, probably one every few days now on the workplace pension stuff. And it's an area where we've become a little bit of a go-to place. I've had lots of financial advisors reach out to me because I've put comments on Facebook groups and even group emails and things, and they've reached out to me and said, look, this is an area we're sort of involved in. How do we develop it from here? And we're now getting obviously referrals as well from lots of other areas. So we've developed a service where we take them through that journey. And then, people might be listening to this thinking, well, why do you want to get involved in that? It's not as fulfilling. If I'm being perfectly honest, it's not as fulfilling as dealing when you're sitting in front of a couple of 55-year-olds and you do their cash flow modeling and you do their financial plan and you sit in front of them and say, hey guys, you're going to be okay. You've got enough money for the rest of your life. That's incredibly satisfying. And that's a really rewarding part of the job. corporate pensions is not like that. It's nice to sit in front of group of staff and say, hey, we're doing a better pension for you. And then you'll get the old 25-year-old say, what do I do here? Is this a good idea? And you can say, yeah, that's okay. Here's some information on that. But you will pick up we pick up clients from this. We pick up, normally it's the more senior staff or the business owners a lot of the time. And they say, well, yeah, hold on. Well, I am that sort of 50-year-old that's I've developed this business. I've got pensions elsewhere. I've got investments elsewhere. Do you help with the individual stuff? And as long as you position it that way, I always position it that when I'm talking to new potential companies, is that yes, we do workplace pensions, but we do full fat retirement planning. We don't call it that in our brochures, but full retirement planning. We do investment advice, and we do insurance as well. So we've got involved in that area. I guess gone down a bit of a rabbit hole, but the opportunity there is massive now, and we deal with a lot of we've just naturally got involved in the tech space. So we've got a lot of tech companies where often it'll be, we've got 200 staff across Europe, but the senior managers are all in London, and there's 20 of them, and they're all on 100, 150 grand minimums. So you're going to pick up clients that way if you carry on. Even if you don't, we charge enough to the companies to cover our costs and deliver a fantastic service. So it's for me, it was a bit of a no-brainer to go down that route, but it's not for everyone. I appreciate that. It's not your traditional financial advice.
But the thing is, though, and I thank you very much for explaining that. That was really a really good overview. I always think if I was in financial planning and I'm considering partnering with somebody to set up a financial planning business, corporate is the way that I would go down personally. One is because I'm a business owner. And I know what other business owners are like. They tend not to think about their own finances as much because they're so head down doing the job that they're doing, and they're trying to build wealth within their business. And I think there are probably lots of very anxious business owners thinking about the future and not sure if their business is going to take off, or when's their exit going to be, or how much money they're going to have, or the value of their business. And we often kind of don't earn as much in the beginning as well. So there is that kind of concern. And having somebody who's gone through the process and you can really put a financial plan in place, is a real benefit within the corporate world. But I think also as well, and just winning the hearts and minds of the staff, because if there's 200 people within there and you're helping them with a pension plan, for example, right, there's plenty of opportunity there around then additional contributions. But also as well, there's the opportunity for life protection, right? There's the opportunity for whether or not they're young, so they might be on the journey to inheriting some money at some point with this great transition to wealth that's happening. So if you're going into those businesses and you're being considered the go-to person when it comes to financial planning, financial advice, there's 200 people then, like you said, within that business that might well refer you on to one of their partners or friends. You don't know what their partners might be earning, a shitload of money, or their friends might be earning a load of money or whatever, or they might be at an age, or their parents or whatever. So it's about getting in front of people either face to face or over Zoom, but as many people as you can. And it's a marketing tool within its own right. Like, how often do you get to sit in front of that many people? Not that often. And businesses give you that direct route in. So when you go into those businesses, I'm just really keen to help people. So they're thinking about going into the corporate world. What's your kind of sales strategy or marketing strategy for getting those clients, sitting in front of those clients, convincing them to pay a fee to come in and talk about the pension planning, but also then converting them into clients? Tell us a little bit about the early stage process.
So we're at a stage now where I imagine some of the more experienced financial advisors are at, where they have clients come to them and it's very much, hold on, do I want you as a client? And that, again, may sound arrogant, but that's where we're at with the workplace pension stuff. It's now, okay, you want our advice. I've got limited time unless I recruit a load of people now. So it's very much, look, here's our process and here's how much it costs. But when you're starting that journey, it's, let's touch on the marketing and the pricing. So the marketing, my old company, we used to do the old school marketing, going around business parks. If you're working on a business park, go around and speak to them. If you wanted to get into this area, our route into corporate advice may not be for everyone, but our route in is, right, who's your pension scheme with at the moment? If it's with someone basic, do you want to look at upgrading it, offering a better benefit to your staff? Most forward-thinking companies want to do that. They want to provide good employee benefits to their staff. We do it as well a little bit on the financial education piece. So yes, you've got private medical insurance in place for their their physical health. You've got maybe some mental health well-being stuff where people come in. What about the financial well-being, the financial education piece? So we go on that angle quite a lot. Even if they're with a great provider already, one of the market leaders, why not bring us in and we'll be your kind of go-to person for everything pension related. So it takes the burden off your HR team, off your payroll. So that's the marketing kind of thing. It depends on your company. If I'm starting afresh and I didn't work with an employee benefits company, I'll probably go and find an employee benefits company to work with. Simple as that, really. So find one that's not my business partners, if anyone's listening to this. But go and find them and say, look, what do you do on the on the pension piece? Because they will have those inquiries. My business partners had those inquiries a lot. It was like, right, you do our private medical, our group life insurance, all of this. Do you do anything in pensions? So that's how we sort of started. Or go old school and just go message businesses, the local businesses, go around business parks, find those companies that have got 20 to 50 staff. That's a good place to start, and go in with that angle of potentially changing their pension scheme. You need to learn about workplace pensions a bit more. That's another subject. But yeah, you can, the marketing again. You could do the sort of online stuff. I've not had much come through directly from like LinkedIn or anything, but we've got our website set up. We've got a web page around workplace pensions, and we do a bit of marketing on that. We've done some Google ads on that, not really generated much, but that's a route you can go. In terms of what was the other thing? The pricing. It's how you actually sell that service is we've developed, again, each person will develop their own process, their own style. What I've done, I eventually went out to a graphic designer and I said, look, I need presentations here because we don't want to bore people with PowerPoint presentations, but I'm getting on to Zoom calls. I've normally got 20 minutes with an HR manager of a company she's very, very busy. He's very, very busy. What do we do? So we got a PowerPoint presentation together. It looks really great. And we just worked out a system of what we would do from starting, going out to the market with their pension scheme, what we would do, presentations to their staff, one-to-one meetings with their staff, and go through a whole process. And we can then send that over to those companies. Conversion rates in terms of the workplace pension stuff, we're probably at over 90% there. Companies, is probably, we're thinking about changing our charging structure. I think if someone said to me, if everyone's saying yes to your prices, then you're probably not charging enough. But we charge enough to cover our costs. But the only ever time we get a pushback is companies that are just not ready to go through the process at this point. It's rarely down to finance. Companies have this money ready to spend on their employees. If you market it as an employee benefit and it's you doing something nice for your employees, most business owners are aware that they need to be doing that nowadays, especially if you're speaking to an HR department. It's a very easy sell normally.
Excellent advice there. I actually agree with you. And if people are buying it left, right, and centre, you probably are in need of putting your price up, I would say, without a shadow of a doubt. And when you go into the corporate world as well, you're absolutely spot on. They have got money aside for these types of things. The bigger the company as well, even like I've got 20 odd staff out there, we spend money on employee benefits. We have people coming out and giving advice around pensions. It's important to us. And, I looked into some statistics. I can't remember exactly what the stats are, but I'm sure people can look it up. One of the great USPs in sales pitches is if your staff within your business are financially aware and comfortable and aren't in fear of lack of money and worry and debt and all those typical types of things, it has a positive impact on the bottom line of the business. The business becomes more profitable the more financially educated the staff are. So if you spend money and time and energy on the financial well-being of your staff, it will have a direct impact on your business. And of course, we're in a situation where there's a recession looming, cost of living crisis, anything businesses can do where they can bring on some form of education to support their staff, they're under pressure to do so, and they have a duty of care to do so. So right now is the best time to do it. And you can wrap it up as well-being, because it is well-being. It's financial education, it's financial well-being. These are the things that often people don't talk about, push aside, and companies are becoming more not responsible, but we give people counselling sessions, we give people private medical care, life cover, days off now. We've gone to the 9-day work week. Loads of benefits that we give our staff from a well-being perspective. So companies are right on it. So yeah, financial well-being is such a easy way into these companies. So when you look at those, do you go directly to the owner of the business or the director of the business? Obviously you talked about sort of targeting companies, say, of 50 staff plus, right? And LinkedIn's really good for that. If you use Sales Navigator, you can make a list of companies based on company size, turnover, how long they've been around for. You can pinpoint directly who the decision makers are within the business. So it's not you don't have to go walking around business parks. It's not knocking on doors. There's a very simple way of doing it. And Sales Navigator is really, really good for that. But what I'm interested in is, and the same in my world, I will I will go into a company and I'd look at the marketing department, for example, and start talking to marketing. So a lot of what I do has a positive impact on their marketing. If I go in and talk to somebody about recruitment in HR, I'm just another recruitment company. Whereas if I go in and I talk to marketing and I express what I'm doing around the podcast and the network that I'm building and the influence I have, I'm then influencing those guys to then speak to HR in a completely different angle. And an internal referral is often far better for you. So what's your approach? Who do you directly target first of all?
Well, now it's all inbound, which is a nice place to be.
Okay.
And it's normally, you're speaking to HR, and then they'll say, "Oh, actually, I need to get my finance director on." And that's I'm like, brilliant, get the finance director on, and I'll show them the sort of benefit of this, and even like how salary sacrifice can save the company a bit of money, things like that. But we can do the calculations of what this is going to cost the business if they put their contributions up to 6%, 8%. What's that going to cost? So that's fine. If I'm starting afresh now, yeah, absolutely. Like you said, going out to LinkedIn, finding those companies and messaging a blanket kind of 200 people. That's fine. The only thing I would say with anyone that's sort of thinking about going into this is we've had the most success with local companies normally. So when we're actually seeing companies face to face, or I don't know why, it's just sort of the businesses that we're attracting online are very much, it'll be tech companies or very fast growing companies, and you're doing everything online. You've got a 45-minute presentation with all those staff. You've got to be very good at making an impact on those people during that very short space of time when you're just on a screen. So if you can go into a local business, professional services businesses, into a law firm, an accountancy firm, or engineers, you can do a presentation to them about what you're doing, if you're changing something about their pensions or doing a financial education piece, you're going to have more of an impact face to face. That's my experience. The experience we've had on the we do a lot of tech firms is just naturally we've got involved in that. We still pick up the odd client from there, but it'll be, if you present to 50 people, it'll be 1 or 2 rather than 5 or 10 people contacting us. So yeah, that's the only advice I give there. But like you said, you don't need to go around knocking on doors in industrial parks, but the face-to-face stuff does generally produce better results in this, just from our experience. But yeah, whoever you're speaking to, it's HR that you need to speak to. We've just taken on a firm which there's 1,500 employees, and we're just about to go and do a lot of work with them. On the call, we had HR director, we had the payroll director and the finance director. And it was great to speak to all of them, because the payroll guys were having a bit of a nightmare speaking to the pension company. We said, well, we can do that on your behalf. We're not going to get involved in payroll, but you get a real issue, we'll kick their ass. I'm allowed to swear on you. Is an arse a swear word?
You are indeed, yeah, you are allowed.
We'll give them a kick up the arse if we need to. From an HR perspective, it was very much, look, we're here to educate the staff. This is what we're going to be doing. This is how we'll structure that. And then from a finance director, it's like, yeah, this is how much it's going to cost. Is it in your budget? And that's all the finance director wants to know is how much it's going to cost. And they'll either have the budget or not. And that's why it's quite nice to deal with corporates sometimes, because it's not the individual stuff where it's like, oh, I don't know if we trust you. I don't know if we want to do this. We're going to put it off 6 months. Businesses, it's either in their budget or not. And they're either wanting to do this or not. So it's normally quite a straightforward conversation. But yeah, who you're speaking to in the business is really important. And if you're going in on the financial education piece and the well-being, that's the HR guys you want to speak to, because they will then sell it internally, just like you said with your marketing thing.
So you mentioned there that you're in the luxury position that the business now comes to you. You tend to get clients that come to you, and you can be quite picky and choosy about who you actually work with. What was the tipping point then of creating that inbound process as opposed to majority being outbound? What was the thing that really got you to that stage?
It's okay. So, we a lot of our business comes from my partners at the employee benefits company. Okay, but it's not a simple journey there. That was very much like, how do we generate this? And for the first 6 months, nobody was doing anything, and their staff didn't really know what I did. So we had to develop that, and that was a bit of an education piece with their staff. So if you're going to look at partnering with an employee benefits company, you need to go and speak to them first and explain what you do, what the benefit is to clients, and how much it costs. That was our sort of tipping point. I did that with their staff, did a few education pieces, started driving that a bit more. Now we've started becoming a bit of a name in a couple of local HR companies. So where companies outsource their HR to these firms, they are now referring clients to me. And again, that was with them, just doing a bit of an education piece with them about what we do, how it works, and how much it costs. And you've just got to keep developing that service. So, yeah, whereas the tipping point is probably, we get a lot from my employee benefits company. If you're not working with an employee benefits firm, you're going to have to develop your own thing. Do I have some advice for that? Probably what we've already discussed. It's not going to be an easy journey. So, but neither was it with my business partner. It's only the last 6 months when it's really the inbound stuff has just gone, just rocketed. So before that, it was starting to come through, and you'll just need to play around with things. I remember the very first company we looked at. My business partner is director at the employee benefits firm. So we've got this company. They want to look at the pension thing. They're with Nest. They want to upgrade. And I said, well, how much do we charge? And they, strangely enough, they only had 20 staff, but they'd gone out to 3 different firms that do what we're doing, which is upgrading the scheme. And I came up with a price, what I thought was okay, and we thought it was reasonable. And they said, our feedback afterwards was, we really like you, wanted to go ahead with you, but you were so much cheaper than the other 2. We just thought there must be something that you're not doing that they are. And there wasn't. We're doing a very similar service. So it's just a chart. So from that point, we said, okay, we need to double that price. And we're probably now at a point where we probably need to increase them even further. So you just need to play around with these things. And it's not like anyone hits the ground running with this type of business. The corporate space is very much, not many financial advisors work in it. There isn't much CPD. There isn't much training in this area. So you need to develop your own thing, and you need to do your own research. And if it's an area you want to get into, then that's how you're going to do it.
Thanks so much for that. I think the key takeaway is that partnering again, isn't it? Is partnering with those other experts that are delivering a service to the clients that you want to work with. So partnering with an employee benefits company is such a smart move. It's very smart because there aren't a great deal of financial planning companies out there anyway within the corporate space. And that employee benefits company see you as an expert and as a benefit. Yeah, you are going in and you have to do a bit of work and you have to educate their staff of how to position what your proposition actually is, which might be tricky to do if you're not a business partner, if there isn't some financial interest going back and forth. So does that mean that the chap, is it a lady or a guy who runs the employee benefits
guy
company?
Guy, yeah.
Guy. So are you two business partners in the sense of shareholders within each other's business? How does that, I'm just trying to think, if I was a financial planner and I'm thinking, right, do you know what? I'm going to go out and start speaking to some employee benefits companies. Should I be giving up equity in my business? Because otherwise you're kind of like, they've got a business to run and they might not be even thinking about pensions. So
Yeah.
how do you get them interested in partnering with you?
Yeah. So yeah, I did give up equity. I took that punt that this would work, and you're going to have to make it work yourself if you're going to. So if you're going out to a new employee benefits firm and you don't want to give up equity, then think about referral fees. The referral fees aren't dirty. It's something that is part of business. I think a lot of financial planners go, oh, they'll never pay an accountant or a solicitor to refer me someone. But if you're going to be going down this route, the employee benefit space is kind of where financial planning was in terms of regulation probably 15 years ago. It's all very much commission based. It's all very salesy, which is not a bad thing. I think lots of people sort of frown at that. Oh my God, sales, I can't go near those. But that's where it is. So if you go in and say, look, we offer this pension service, we'll give up, if you want to refer clients to us, we'll pay you a referral fee. I now pay the staff of my business partners company. So they are staff that have just come in. We pay them a small referral fee for sending stuff over, which is okay. What were the other points you said? So
It's something when you potentially
you need to do. I just wanted to touch on another point as well. This is lead. Ultimately, this is lead generation. When I started my financial planning business, I thought, right, I'm just going to deal with couples that are in their 50s, that are within 10 years of retirement, just nice people. And that's generally my personal individual client book, is that. But you've got to adapt. You've got to develop. You've got to get those leads from somewhere. Ours often comes from the corporate stuff, but then we also got the voucher for and LinkedIn and everything as well. And obviously we do get website inquiries and phone calls, which is fine. But the corporate space helps us get those clients as well. You've got to just adapt as well. There's a company we've started working with who wanted somebody to do their key person insurances, which is, again, an area I've got experience in. And I thought not many financial advisors get involved in this space. Not something that most people love. It's insurance. It can be a bit of a pain. But just yesterday, I was on a call with a tech exec in London, and she's been given something like 20, 30 million, and they need from venture capital trusts or some VCs and private equity. And we're setting up key person insurance for them. Mentioned during our call, I do wealth management, financial planning, and that just pricked her ears up and said, I need that. And she's early 50s, ideal client, and we're now looking at setting up a meeting for that. So it's it's one of those things, like you said earlier, just getting in front of people. You mentioned those other things you do. You might speak to 50 people and nobody comes and contacts you, but you will get those employees or those business owners that come to you and say, actually, I need you for this other area.
Oliver, you have to be in it to win it, right? You've got to be in it to win it. You've got to be reaching out to people. You've got to be consistently reaching out to people. Your niche then, do you specialize in tech companies? Is that kind of your area of expertise? Do you tend to focus on that really over anything else?
Only because I think it's like most people niches, their niche often comes to them, I think. We had, it wasn't intentional. I guess there's a bit of rapport there because often the tech guys we're speaking to are in their 30s, which is where I am, and they've been given a load of funding. And then they're looking at improving their employee benefits, and then we're also looking at insurance policies and things, which is great. As individual clients, I don't take many of them on, but the tech space is not full of 20 and 30-year-olds. It's actually, there's plenty of clients I've spoken to and have taken on that are in not just tech, but fast-growing companies that often have been given some funding. They'll still, some of the senior managers and the execs there will be your ideal financial planning clients, which are traditionally the kind of age 50 plus, looking at stopping work in the next 10 years. So naturally that's become a bit of our niche, but not necessarily. We still work with quite a broad range of companies.
Fantastic. Great stuff. There's another thing you mentioned I just want to ask you a question on, actually, is outsourced HR companies. So did you partner with, because that's actually a really good link, because obviously outsourced HR companies do HR for companies. So they've probably got 50 clients, 40 clients, or however many clients. So they'll know and it's a great way for them to, again, offer additional services. So partnering with an outsourced HR company is a really good partnership, right? For a financial planner looking in the corporate space.
Yeah, it can be. Yeah, they're generally not working with massive companies, but they are.
Right.
Yeah, their clients are all business owners. So yeah, if you're just thinking about that kind of route, think about who you're partnering with. Yeah, my employee benefits business partners, all of their clients are running businesses. So it was like, well, why don't we set up a pension service where we're targeting businesses? Yeah, if you go to an HR department, all their clients are business owners. If you're going to an accountancy, you want to try and partner with an accountancy firm. Most of their clients are going to be either self-employed or business owners. So if the corporate space where you want to be, you just got to think about who you're targeting, not necessarily going directly to the source, but going to the people that are going, because I've got the HR departments that sort of refer to us. They've already spoken for us. They've already sold our service, and then said, look, Oliver's the expert in this area. Go and speak to Engage Wealth Management. So it's a pretty easy sell from that point onwards. So yeah, it's HR department, outsourced HR is not something to give a miss.
Fantastic. Oliver, you've really shared quite deeply today around your career and definitely around the corporate side. So I've learned lots today. And I think people who are listening to this podcast, it should put their ears up a little bit and get them thinking about working in that corporate space. So thank you for sharing so honestly and so deeply about that, because I think that will inspire people to perhaps look at areas that they can move into to develop new client banks and new client relationships. So thank you so much for that. On a sort of final note, what would you say what makes a great financial planner, do you think?
What makes a great financial planner? I think what we referred to it earlier. Don't ever forget that this is a sales industry. I think it's not. Yes, it's not phone sales or secondhand car sales, but you've got to have that rapport. You've got to have that personality. And I think that often trumps the technical side of it. You're always going to have somebody that's there that has the technical capability that can assist you. But if you want to be a financial planner, financial advisor, you've got to have that kind of rapport and that bit of life experience. I think you mentioned earlier about a graduate coming straight into the profession. What have you done before that? What stories have you got to tell? Because you need to have some life experience before coming into this industry. I think that's my personal view, but perhaps not. I think you've got to be adaptable as well. There are lots of financial advisors I know that started their companies and they said, okay, I need these clients and I need this much money to live my lifestyle, which is a great position to be in. But if that's not your position, it wasn't mine. It was, I needed to bring on quite a lot. Got a mortgage to pay. I've got children, young children, and my wife works part-time. So we needed to bring in some pretty hefty amounts to keep our business running and to keep growing the business as well. So you've got to be adaptable, and that's what we've done. I never set out setting up my company thinking I'm going to be the workplace pensions go-to expert. And now we're moving as well into a lot of the business insurance side, and we're becoming quite known for that as well. Didn't really want to set it up like that, but that's where we've gone, and we generate a lot of individual clients from that. So hopefully that's that gives you an idea. I think a great financial planner can be a lot of things. It's, you've just got to think very carefully about it. If this is the industry you want to go into, you are going to be in front of people. You've got to be comfortable with that. If that's not the route and you prefer the technical stuff and you like the spreadsheets and the reports and the compliance side of things, I think paraplanning and compliance is absolutely a massive career opportunity now. Financial planning is not for everybody, but it is very nice and it's very rewarding once you get to a point where you're very comfortable.
Brilliant. Oliver, thank you so much for your time today. Really, really, really appreciate it. That was a fantastic answer. You've covered some really great topics for us today. So really, really appreciate all your honesty and all your experience. And we wish you the best of luck at Engage.
Thanks so much, Sam. Take care.
Cheers.